Hello, everyone. Welcome to the Day One Plenary Session at Taixing Summit 2021. I'm Li Xing, the Managing Editor of Taixing Global. And sitting with me at the virtual fireside is Mr. Griffin, one of the most recognized names in the Wall Street. He is the founder and CEO of Citadel, one of the leading hedge funds with $38 billion assets under management by August this year. And he funded the company right after graduating from Harvard all the way back in 1990. He's also founder of Citadel Securities, one of the world's largest market makers, which was set up in 2002. So very glad to have you here with us, Ken.
It is such an honor to be here today. I wish I could join you in person.
Next year. Our previous speakers talk about the outlook of the global economy in 2022 from the perspectives of the economists, academia, politicians, and industry leaders. I want to pick up from there and tap the best brain from the market. So Ken, let's start from the US economy. What is your outlook for the US economy, especially how much do you worry about the inflation in the US?
So first, the good news. The US economy today is larger than it was before the pandemic. It's been a remarkable story of a recovery from a very dark moment. Now, the challenge is that our labor market has shrunk significantly since the pandemic began. Today, there's about 5 million fewer Americans working in the workforce than there were pre-pandemic, and there are 10 million jobs open. This has caused incredible challenges in our supply chain. In fact, Chinese corporates are quite aware of the challenges that we have in our ports in moving goods from ships to trucks to the end consumer. The combination of supply chain bottlenecks and a reduced workforce has incredibly put pressure on inflation here in the United States. And we're concerned that the Fed is going to have to start to hit the brakes with tighter monetary policy to control inflation in 2022 if we do not see more people return back to work here in America.
So still watch out for the supply chain labor force shortage and look forward to Fed's next move.
That's exactly right.
How about China? Sitting in Chicago, what is your outlook for the Chinese economy and especially the country's financial markets?
What is remarkable is how well China has navigated the pandemic. The policy response to this dreadful disease has been incredible, and the protection of human life has been remarkable. Now, clearly, China and the United States are very tightly integrated by virtue of trade. And of course, any steps that take place in the United States to slow inflationary pressures will put pressure on global growth, hurting the economies of both countries. China also struggles with many of the same challenges that the West struggles with. For example, scarcity of commodities such as natural gas, coal, or oil that are putting pressure on all of our industries. The good news is China's strong focus on its domestic economy, strong policies oriented towards growth, should help to protect the Chinese economy from much of the current pressure. But of course, if we see a slowdown globally, we're going to see a ripple effect take place in China.
You just mentioned the US-China are tightly integrated by global trade. And there are a lot of worries on decoupling between US and China from trade to investment. What steps can US and China take to strengthen their financial ties?
So obviously, stronger financial ties will bring our two countries closer together. And that is so important for the world's growth story and innovation globally. I'm pleased to see the return of our two countries to the negotiating table to pursue a more constructive tone on trade. In financial services, the government of China has been very focused on improving and strengthening the ties between our two countries. They have placed an importance on thoughtful growth and thoughtful integration in their policy decisions. We've seen new licenses granted to the JP Morgans and Citigroups and BlackRocks of the world that signify China's commitment to opening its financial markets to U.S. participation. And this is against a very important backdrop. The United States is the most important source of foreign direct investment in China. China is one of the largest owners of U.S. sovereign debt. Our countries have a long-standing financially integrated economy, but the steps by the government of China to further that integration are important to the joint growth of our two countries.
Just like you said, that despite the geopolitical tensions and the financial sector opening up has always been front and center at the Chinese regulators' agenda. You've been a player in China's financial markets for quite a few years. How would you evaluate the development of China's financial opening in recent years?
It has been remarkable to see China's embracing of foreign investment within its domestic economy. For example, the inclusion of China in the MSCI index was an incredible event for China with respect to attracting capital flows from around the world. And I give great credit to the Chinese regulators for putting forth a set of policies that made that event take place. Stock Connect has been an incredibly important channel for foreign investors to invest in Chinese companies. So we are seeing in China a very thoughtful focus on how to broaden the ability for foreign investors to participate in the great Chinese companies that are driving so much of not only growth in China, but also growth around the world.
So Citadel has entered China in 2010. You've witnessed both bull and bear markets, a big crash and the following rounds of regulation changes, this and that. In your view, what roles can foreign firms play in helping China develop a more mature capital market, especially with greater long-term investment?
So I think it's important to recognize that Citadel has been active in Asia since 1990, the year of the founding of the business. And in fact, we were an important investor in Hong Kong throughout the 1990s, where we saw a tremendous opportunity created by the Hong Kong entrepreneurs. We've been involved in mainland China from the early days of Citadel Securities, and we've seen a continued focus by the Chinese policymakers on creating one of the world's most transparent and fair markets in which to participate. China has, for example, been at the forefront of embracing markets that have openness and transparency through electronic trading, that helps to give people around the world confidence in the equity and fairness of dealing in China. Now that we see American firms working with Chinese firms on a number of different fronts, for example, raising capital, we're seeing the sharing of best practices between our two countries in the allocation of capital, in how to think about risk management, in how to think about the development of new markets, for example, a high-yield financing market that will broaden the tools available to Chinese corporates to accelerate growth, and at the same time creating more opportunities for Chinese savers to deploy their savings in thoughtful ways.
Thanks for sharing those interesting stories and anecdotes. Now let's go back and focus on Citadel. 2020 marks another year of very good performance for Citadel. Your flagship fund was 24.4% returns. What are Citadel's successful experiences that can be learned by your Chinese peers?
So if I look at our success in 2020, and this year has thus far fortunately been equally successful, it all comes down to our focus on talent. We are incredibly proud of the people that work here at Citadel, and we're incredibly proud of how our team collaborates and works together to solve problems and to identify opportunities where we can deploy capital thoughtfully on behalf of the pension plans and sovereign wealth funds and endowments and foundations that entrust us with their capital. One of the important advantages that we've had over the course of much of the pandemic is that our team has been together in our offices around the world, collaborating in a way that's very hard to find in the Western society today. But we find that the tight working of our team together is important to developing and mentoring our junior members of our team, to helping them to understand the insights and observations that our more experienced team members have in making investment decisions.
So talent is the key. And then for China's promising asset management market, which the overall assets under management, which is reaching $18 trillion in 2020, what is Citadel's future strategy in China in that regard?
So we have a two-pronged strategy in China. For the hedge fund, we are an active participant in the Chinese markets looking for investment opportunities across the various incredibly well-run Chinese companies. What's remarkable is that China today is the source of so much innovation around the world, particularly in e-commerce and in fintech. And we are very excited to see these opportunities to participate in these companies, which have been led by incredibly thoughtful entrepreneurs with very hardworking teams behind the ideas and concepts that are being brought to market. At the same time, Citadel Securities is hoping to expand its reach into China. We are the largest market maker in equities around the world, and we would like to be more engaged in China over the years to come as a thoughtful partner, both in providing liquidity within the Chinese market and in working with Chinese corporates in accessing capital from around the world.
So Ken, you share, thanks for sharing your optimism on the Chinese market and your confidence in this. There are some questions regarding the regulatory changes recently. Would that worry you at all? Are you in China for the short term or for the long-term profit?
Well, having participated in China for almost 30 years of my life, I would view ourselves as an incredibly long-term investor in China. And it has been unbelievable to witness the economic miracle that's taken place in your country. And it's nothing less than a miracle. From a regulatory perspective, I believe that the government of China is very focused on strengthening the domestic economy and reducing the dependency that China has on the global economy as a source of growth. I think that's a very wise decision to strengthen China from within as China heads towards being the largest economy in the world. From a regulatory perspective, the push in fintech has been a remarkable transformation of China's economy. So for example, payments at Alipay or at WeChat is the envy of the West. It's incredible how efficient Chinese consumers and merchants can deal with the acts of purchasing goods and services. And I applaud China for its focus on a digital currency. The Central Bank of China appears to be far ahead of most of its Western peers in advancing towards a digital-based world for currency.
I know you have a fascinating personal story, and I want to ask about that before we end up our conversation today. Your entrepreneurship was evident from the very young age. I read that in college, you started trading convertible bonds, buy put options, and to facilitate your around-the-clock trading, somehow you convinced Harvard to allow you to install a satellite dish on the roof of your dormitory to receive stock quotes. How did all this happen? What inspired you to start doing what you do today?
So I was very fortunate to have grown up in Boca Raton, Florida, where IBM developed the IBM personal computer and had a perspective that the integration of mathematics and software engineering would reshape the world's capital markets. That was the thesis of Citadel, and today of Citadel Securities, was that the integration of talented professionals empowered with world-class predictive analytics and superior tools with which to identify opportunities would change how capital was invested and deployed. And if I look, for example, at Citadel Securities, which is run by Peng Chao, Peng, like myself, is an entrepreneur. He grew up in mainland China. He attended Peking University. He did his PhD here in the States at Berkeley and joined us back in 2006. As CEO of Citadel Securities, Peng Chao has dramatically taken our business forward by embracing our focus on talent, on a culture of strong risk-taking and risk management, and on a platform that has developed some of the most advanced predictive analytics ever built in financial services. That's an incredibly important platform that meets the needs of corporates, of pension plans, of sovereign wealth funds, and of retail investors around the world.
Thank you. With that note, We probably have to end today's conversation, but thank you so much for your insight, for your optimism, and for your passion.
Thank you so much.